Hello traders, this is Owen Larson with Mission Winners, and you're listening to the Mission Winners Market Edge, where we stay ahead of the trade. Each week, we break down the markets with clear, actionable insights, helping you stay disciplined, focused, and always prepared for the next big opportunity. In today's episode, we're tackling a market that's been whipping traders around with sharp reversals, volatility spikes, and uncertainty at every turn. The big question: are we setting up for a real rally, or are we about to get faked out again? We've got a packed lineup for you today. First, we'll take a deep dive into the ETFs with Pat Walker, where he breaks down which sectors are showing strength, which ones to avoid, and how the big picture is shaping up. Then we'll step into our educational session, covering how to trade smart in this environment without getting chopped up. And finally, we'll wrap things up with Pat's MAXLIST analysis, breaking down the biggest stocks in the market, because if we're going to see leadership emerge, we may very well see it start there. So let's dive in. Here's Pat with the ETF breakdown.
So here's the S&P 500, the spiders. And I love to look at these because it gives us a great broad brushstroke of, hey, this is the 500 big stocks. This isn't the little stuff. This is the big ones. And you can see it's been dropping here on increasing volume on the weekly, and it's been falling steadily on the daily. And it's below the falling 50-day. That's the green moving average right here. What does it tell us? Just be a little cautious here. I mean, it's in a downtrend. Okay. Now, I'm not saying it's going to keep on going down. Nobody knows the future except that fact. But we look at it here and say, well, it's kind of dropping here. We got to be a little cautious. That's all. That helps us a lot. Remember this, folks? And I said this at IBUY for years. What you're looking at here right now, these are charts. It can quickly become a video slot machine if you let it. Don't let that happen. Wait for good setups. Have the discipline to wait for those good setups. You'll be better for it. Let's continue onwards here with QQQ, NASDAQ 100. So we looked at the S&P 500. Now we look at the NASDAQ 100, the big boys. How's that look to you? It's in a downtrend right now. Okay. I'm not saying it's going to continue going down. Nothing like that. I'm just saying at this point, it's going down. It says, be cautious. Don't fight it. Don't fight it. Okay. More money is made with less hassle in a good uptrend like this and this than trying to pick the bottom. Good to remember. ARKK, ARK Innovation, that's in a downtrend, tells you to be a little cautious here. Same thing's true with next generation internet in a downtrend. You can see it on both daily and weekly. Just be a little cautious with it. Biotechnology, now this one's picking up a little bit. Look at that. Market was pretty sloppy. We showed you at the beginning, but look at BBH actually picked up. Something you might want to watch this week. And maybe not just the biotech ETF, but maybe individual stocks. Still in a downtrend on a weekly, but again, even on the weekly, it closed up on the weekly bar with a slight pickup in volume. Something that bears watching. There's no super great entry right now, but maybe there will be during the week. There you go. So now we have an idea. Flip the coin. Energy, it ain't so good right here, is it? Be careful with that. Leave it alone with energy stocks. Dow Jones Internet, pretty tough right here, folks. Look at this. Bit of dropping. Says just be a little cautious. Same thing's true here on the weekly. And that's internet stocks. All right. IBD 50 closed near the lows of the day on Friday. It's in a downtrend. IBD 50 is a great list of stocks, folks. And ones that can make good moves up. But right now, these good stocks, they're not doing much. And that's not criticizing investors daily. No, it's a great list of stocks. It's just, you can't fight the market. It's kind of rough right now. Be a little cautious. That's all. Now look at gold miners. Well, that doesn't look too bad on the daily. And look at the weekly. What do you see here? Here's why we do it, folks. I don't know about you, but I kind of see a couple of the handle right here. That's something to watch going forward. GDX. Hey, remember that. Gold miners. Remember the word gold. Here we go. And there's why. GLD. Look, this is acting fine too. Kind of trending up. A little bit of a down bar here. Closed below where it opened. It's basing. That's nice. Do we own this? Yes, we do. Here's the weekly base breakout. And there it is. And it's a nice move. It's not a monster move, but it's, from here up to here, hey, I'll take it. It's working. Have we sold some? Sold a little in the strength. We're fine. It looks okay. Something to watch going forward this week. So now you got another idea. Gold miners and gold. And don't forget BBH. I hope you're writing these down. Cybersecurity. Yeah, they need some security, don't they? There's nothing good there. Stay away from cybersecurity stocks. Biotechnology, another biotech ETF. A little sloppy here, just to be a little cautious, choppy. Online retail. Ooh, that's not so good, is it? Stay away from that group. Online retail stocks. Software, still dropping down. I mean, there it is. When's it going to stop? I don't know. Nobody knows the future. But right now it's in a downtrend. Don't fight it. And by the way, also, this is important. I've been doing this since 1986 and ran a ton of money into the crash of 87. Okay? I mean, a ton. 7 figures, maybe 8 figures. Okay? Don't argue with the markets. Just get in line with them. You'll be better. I really mean that. I'm speaking from my heart. It's things that I wish somebody would have told me. There we go. Let's rock and roll on here. I was a young buck when all that was happening back then. Okay. IHI, in my early 20s. Here we go. IHI, kind of choppy here. All right. Medicine, be careful with it. I think they need drugs. Okay. Dad humor. I had to say it. Sorry. Okay. Mid-cap. ICOR, mid-cap. In a downtrend, be careful with mid-cap stocks. Aerospace and defense, kind of sloppy, be cautious. Home construction, home builders were great for us last year. Boy, did we have a good run. Look at this on the weekly. Look at that run. That was sweet potato pie. Now it's kind of rough, and it just says, be cautious with home builders. It's in a downtrend, leave it alone. S&P 500 growth, it's in a downtrend, be cautious. You can just see it. There you go. Let's continue onwards. IWM, small caps, they're in a downtrend. Be a little cautious there. Real estate's acting okay. Okay. Kind of lifted up here a little bit. It's stronger than a lot of the others. That's for darn sure. Not a real clean entry at this point in time, though, and a little bit of overhead on the weekly. So just caution there. Transportations, they needed a hitchhike, I think. Nothing good going on there. I'm sorry I had to say it. That's bad. That's dad humor. Airlines, look at this. Jets. Be careful with airlines. I think you could say they're grounded right now. Okay, dad humor. You got to have fun too, folks. Banking in a downtrend, be careful. It's not good when the banks are in a downtrend, folks. I'll just tell you that. All right. Insurance, that one doesn't look too bad. In relation to a lot of the others, maybe something to watch. Either the ETF or maybe some insurance stocks. There you go. See what we're doing here? We systematize. That's it. We're organized. Regional banking? No, there's nothing there. We have no deposits there. Okay, there you go. Mid-cap, lagging, be cautious with mid-cap. Oil services, lagging, be careful with oil services. Pharmaceuticals, oh, that one doesn't look too bad on the daily, does it? Oh yeah, we own this one too. We had a good run on Lilly, okay? As you can see right here, it looks fine. It looks better than almost all the others I showed you. You might look up PPH top 10 holdings, and you might find some opportunity there. That's how we do it. Strength begets strength. Kick on it. NASDAQ 100, lagging, be cautious. NASDAQ 100, leveraged, lagging, be cautious. Maybe it's going to get a bounce in here. We'll watch and see. All right. By the way, don't try. I've been doing this, like I said, for a long time. Please don't get all wrapped in, I'm going to catch the bottom. I'm going to catch the bottom. That's an ego deal, okay? Look for some strength. After it's done a bottom and it starts to turn up, look for continued strength. Catching the bottom, really, it's an ego deal. So be cautious with that. Just from a psychological perspective, and again, I've got a background in that, make sure what's going on between your ears is calm and conducive to good decision making and doesn't have arrogance with it. Just need to share that with you. That's important. Retailing, I think there's a fire sale on retail. Not much going on right there, is there? Be careful with retailing. Cloud computing, pretty ugly. Be cautious with cloud computing. Silver doesn't look too bad, does it? Now, isn't that interesting? What was the other ETFs or industry groups I mentioned? Gold. Okay. See the common theme? Silver and gold. They could write a song about that. Okay. Doesn't look too bad. Basing up here. Something to watch going forward. All right. Steel's still kind of lagging. Look at the weekly. That's not so good. SMH, semiconductors lagging. Be careful with semiconductors. Same thing as we were with this one. SSO, S&P 500 looks like spiders. Okay. Dropping down here. Be a little cautious with that, folks. Maybe a bottom bar here, but don't try. I'm being serious here. Don't try to catch the bottom. Okay. That's an ego thing again. Look for this is why I love a higher low setup. It falls. I'm going to draw this for you. All right. We made a lot of money with this kind of a setup. A stock or an ETF falls. And then it goes up. And then it starts to fall again. And then it turns and it starts to go up. That is called, I call it the higher low setup. Something I developed a long time ago. And what's it show? A reversal of the trend. Oh, it's falling. Oh, look, it's going. Oh, it's falling. Oh, look, it fell, but it didn't fall as last. Maybe it's showing some strength here. When it turns and starts to take out the high of that pivot right there, that can be a viable buy. It's a higher low setup. It works on ETFs and it works on stocks. But remember, you got to have the M in mission winners. The market's doing okay too. But this higher low setup, boy, we made money on that. Ask our VIPs about, oh, what company was it? Yeah, NVDA. Ask about the higher low setup on NVIDIA. Woo! Solar stocks, nothing there. Small cap stocks, be cautious. Oil, lagging, be careful. Aerospace and defense, there's nothing good there. Leave it alone. Biotechnology, it's easy for me to say. Biotechnology lagging, be a little cautious. Home builders, not a lot of power there. Be cautious. Materials, just choppy, not a lot of power. Communications, not a lot of power. Energy, not a lot of power. Financials, no power. Industrials, not a lot of power there. Lagging. Look at technology, folks. Hit lows for the move on Friday. Just be a little cautious. I need to pause here and share something. Please don't think, oh God, Pat Walker's negative on everything. No, gosh, no. I'm always looking for opportunity. But if it's not there, it's not there. I know that's a very profound statement. Think about this. If it's not there, it's not there. Really, folks, it's the truth. Don't make something out of nothing if it's not there. That will help you. Oh, and by the way, again, am I all bearish? No, I'm always looking for opportunity. Always, but I don't fight the markets. And you know what? There's another key point. And we're always ready. I will have a shopping list of stocks for Monday and for Tuesday. Every day I have a shopping list. It doesn't mean I'm going to buy, but I'm always ready. It's a business and we run it like one. Keep that mindset. It will help you. Consumer staples doesn't look too bad, does it? It's kind of a defensive group. See? Things you got to have. Utilities lagging. Healthcare doesn't look too bad. Oh, healthcare, let me think. Gosh, there's a lot of things I don't need, really. But you know what? Healthcare. Yeah. And it's a defensive sector. You got to have it. Doesn't look too bad, does it? There you go. XLV, something you might want to look into. Excuse me, just for what it's worth. And XLY, consumer discretionary, things you don't have to have, okay? There's a lot of things in life we don't have to have. It's discretionary buying, and you can see it's lagging. What's that tell us? People are being cautious. They're not buying a lot of stuff in that realm, in those companies. Metals and mining lagging, oil and gas lagging, retailing lagging, software lagging. We go back to the top.
Great insights from Pat. And if there's one key takeaway, it's this: stay focused on relative strength. Some areas of the market are trying to hold up, but plenty are still struggling, and this is not the time to fight the trend. The S&P 500 and the NASDAQ 100 are still in a downtrend. Tech is weak overall, but there's some strength showing up in biotech, gold miners, and insurance. Energy, financials, and online retail have no strength right now, so those are areas to avoid. Gold and silver are acting well, which makes them worth keeping an eye on. Now that we know where the market stands, the real question is, how do you actually trade this kind of environment? That's what we're going to cover next. When the market is this volatile, discipline is everything. This is not the time to chase moves or force trades. Instead, you need to focus on execution, risk control, and waiting for the right setups. So let's get into it. Here's today's lesson. We're in what looks like day one of a new rally attempt. The QQQ had a strong upside reversal, bouncing hard off the lows. That's a start. But before we get ahead of ourselves, let's put it in context. The S&P is still below some key moving averages. The 50-day, the 21 EMA, and the 8 EMA are all still declining. That means we're not out of the woods yet. The NASDAQ is down about 11% from the highs, which means it's in correction territory. The S&P isn't quite there, down about 7.8%, but it doesn't look strong. So what does that mean? Well, Friday's low is now a key level. If it breaks, that's bad news. Bulls want to see follow-through and higher lows. Bears, they want this rally to stall out at resistance and roll over hard. We'll know soon enough. But here's the key. You don't have to predict it. You just have to react smartly. First rule, good location, no chasing. If you're buying breakouts right now, you're asking for pain. This is not a momentum market. You want to buy near support, not in the middle of a rip-your-face-off rally. Second, patience pays. The best setups don't happen in the middle of the storm. They come after the storm clears. If you're forcing trades when the market isn't ready, you're going to get chopped up. Third, tight risk, no loose stops. This market isn't forgiving. If your stop is loose, you're just handing over money to the algos. Fourth, watch for leadership. Here's the issue right now. Many of the stocks that led the last move higher are still leading to the downside. That's not what we want to see in a strong market. Until we see real leadership emerge, things are suspect at best. Now, let's talk about a few stocks that are telling us what's happening under the surface. NVDA had a strong reversal, but it's still in a downtrend. It needs to get back above the 21 EMA before it gets interesting. Meta had a strong close and is showing relative strength. Palantir is holding a base pivot level, could be setting up. Now that we've covered the big picture and how to trade this kind of market, let's shift gears and focus on the biggest names in the market. That right there is the key. Understanding how to position yourself in a market that's still proving itself. The difference between traders who survive and thrive and those who get chopped up all comes down to execution. Now, we've covered the big picture and how to trade this kind of market, but the real action when it comes will be in the biggest names. That's why the max list stocks are so important. These are the stocks that institutions focus on, and if the market is going to find its footing and start a meaningful rally, we may very well see it show up in these leaders first. So let's hand it back to Pat for a deep dive into the max list stocks. What's setting up, what's lagging, and where is the money likely to be headed next?
So now let's move on. Look at the stocks. Max list. Apple is just basing here, okay? But you can see it's choppy. It's kind of like the market, folks. And remember, if you impose your will on the market, you can get chopped up. Let the market tell you what to do. Let the stock tell you what to do. It's whipping around on the daily. It's whipping around on the weekly. Starting to lift up. It's loose here, though. I mean, whipping back and forth equal high investor emotions. Just be a little cautious. That's all. Amazon hit lows for the move on Friday. Look at that. Lows for the move. That tells you just be a little cautious with Amazon at this point in time. That's all. Again, it's not that fancy. That's what I like. Doesn't need to be. This is the like a derivative of Amazon, okay? And it's in a downtrend also. It's lower priced. You can, if you can't buy a $200 stock, well, you can buy a $34 stock. See? And it moves just like it. Look, there's Amazon. There's AMZN. It's same dang pattern. All right. So, and it's plenty fluid. Does a lot of volume. But is there anything to do with it right now? No. Let's continue onward. Alibaba. Now look at this base on Alibaba right up here. That's a potential. By the way, I want to show you something here. At Mission Winners, you see this base right here? That's a cup with a handle. Market's not doing anything. Market's not doing anything. This is why we look every day at Mission Winners. We own this right here. And that's a whale of a move right there. There you go. Cup with a handle. Look at the volume pickup on that bar. I'll make it a little bigger so you can see it. Right there. And off to the races. There you go. Now, it's basing up here again. You can see this. You can't catch me in a lie, folks. I already have the price alert set. If this thing starts to lift off, I'm going to drop it just a hair. If this thing starts to lift off, guess what? We'll buy more. Now, I've got to tell you, it's an alert. It's not a buy stop. It's a price alert. We'll watch it. But if it does that, yeah, we'll be ready to buy more on Alibaba. BIDU, that's a little choppy there. Be kind of cautious with that. Goldman Sachs, there's nothing there. Look, it's in a downtrend. Leave it alone. By the way, when I'm scanning charts, I can just go, you can do it too. You train your eyes. There's nothing there. Move on. It's that simple. Google is lagging. Really nothing to do with it. Be cautious for right now. MasterCard dropping. Leave it alone. Meta dropping. Leave it alone. Now, here's a classic case of the tactics. We owned this, folks. This was on the key list. We talked about this. Pushing through here. That was a great run. Huge run. Sells into strength, and when it starts to fall, you sell more. You see the selling volume on that bar? You're selling more. It keeps dropping. You sell the rest and lock in your gain. Looking at day charts only to make decisions. Now look at it. Is there anything to do with it? Nope. Leave it alone. Excuse me? Microsoft. There's nothing there. Leave it alone. Oh, and again, I stress, weekly on the left, daily on the right, side by side. You get a good picture, a bigger picture view, and a daily view of, is there opportunity there? Is there money there? And on Microsoft, right now, there isn't. Netflix. Whoa, check that out. Folks, institutions use the 50-day. We use the 50-day for buying. Look, I want to push through the 50-day here, and then it followed up. But it lost the 50-day here, selling. By the way, look at the down volume bar here. Look at the down volume bar. You see the selling bars right here? It was telling you to be cautious. As it was going through here, I'm going to show you a great lesson. Well, it's just kind of basing. I see, let's see what happens if it gets near the 50-day. Okay, that's okay. It's just chopping here. There's no conviction here. Oh, look at that. It came down to the 50-day. Bounced off of it, but it came down to the 50-day. We got to kind of watch that. I don't want that to lose the 50-day. We're not in it, but yeah, I'm glad we're not in it. It's just been kind of sloppy here, underperforming. Oh, lift it up. Okay, but gosh, there wasn't a lot of buying power, was there? See? Price combined with volume. Not a lot of power there. Be careful, and the market's kind of sloppy. We'll wait. Boom. Right there, folks. That's a real-time lesson. And aren't you glad you didn't own it? We didn't own it. There you go. Nothing to do with it at this point in time. Leave it alone. We'll go rent a movie and watch a movie. It'd be better than watching that stock. Here we go. NVIDIA. Of course, you know what? Yeah. Of course, I'm going to really go back in time. Remember when you went to the store to rent a movie? Blockbuster Video? Golly, that was a long time ago. Now we stream it all. Here we go. NVIDIA. But I will tell you this. I bet you all did too. Browsing up and down the aisles looking for movies that you might like. Man, we saw some great movies doing it that way. Okay, got off on a tangent. NVIDIA, nothing there, leave it alone. And it'll turn eventually and it'll be great, but not right now. Same thing's here with the Tesla. There's nothing there, leave it alone. Tesla was real good for us, by the way. You see that weekly base breakout right there back in November? Yep, we owned that. That was a good run. That was a great run. But is there anything now? Nope, leave it alone. The derivative of Tesla, okay, the lower priced one. Here's a beautiful thing. I'll share this with you. This is Tesla. Look at the weekly chart. Look at the daily chart. Well, there's nothing there. It's a $260 stock. Here's TSLL. It's a $10 stock. It's basically the same pattern. Look, here's the daily. It's the same pattern. So what am I saying for you? If you don't want to buy a $200 some odd stock, you've got the opportunity when it turns to buy, I don't know, a $10 or $12 stock, whatever the price is. Do you see that? And it's the same pattern. So something to watch is my public service announcement to help you, TSLL. And it's plenty liquid, folks. Take a look. I mean, the thing does what? Some odd million, 100 million shares a day, average daily volume, 90 million. You can slide in and slide out without causing a ripple. There you go. And then we've got Visa, lagging, leave it alone. And then we go back to the top. Anyway, that is an overview of the MAXLIST stocks. I love them. But what is it telling us right now? The markets are kind of in a rough spot. And it says, just be a little cautious. Okay. Don't be lazy. We're not lazy. We will be prepared Monday. But we'll also have the discipline to wait for our pitch.
All right, another powerful breakdown from Pat. The big name stocks are telling us exactly what we need to know. Some are trying to hold up, but for now, we still need patience, precision, and a plan. The market isn't in rally mode yet, but when it turns, we'll be ready. That wraps it up for today. A huge thanks to Pat Walker for another great deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to our YouTube channel, check out missionwinners.com, and stay sharp out there. Master your strategy, trust the process, and maintain your edge. See you next time.